Hello and welcome. Hello and welcome. Hello and welcome.
Hello and welcome to the Investor Lab, the auditory epicenter for passionate people seeking a life of freedom, choice, and abundance.
If you can understand all this, understand the motives and motivations of the other side, show the other person you care and build a connection, be clear and concise and direct with what you want, be confident, clearly understand the mechanics of the situation or the deal, be like water and flow around the obstacles to get to where you want to go, operate with a clearly defined set of moral guidelines, and respect yourself and the other side and know when to hold them and when to fold them, you're going to be totally fine.
Yeah, just looking at that list, I think, to be totally honest, I think that's why we enjoy what we do so much, is because that is how we show up in the world. Because why would you show up in any other way? Why would you show up in a way that it's a competition and you're trying to fight and you're trying to defeat some other side when you can all work collaboratively and still get amazing results?
Everyone wants to win, right?
Yeah, I think people think that if you're acting in a way that is understanding and with empathy and assertive and but flexible and with integrity, I think people think that, well, you must be a pushover. You might not be getting the best deals, but it's just a way better world to be living in.
If you have to take a sledgehammer to something to make it a good deal, it has to be a pretty bloody good deal. You know, like it's got to be worth that effort. It's got to be worth that emotional effort. And just going back to that point that if the only way you can create a win is by creating somebody else's loss, you're missing the point.
What do you think has been the biggest challenge that you have faced, either mechanical or non-mechanical? So it could be like technical or mindset wise. What's been the biggest challenge you've had to overcome to do that? Because I got to say, most people never, 94% of property investors never get past 2 properties. 73% never even get past 1. You've gotten up to 5 properties and you've done it in 5 years and you've done it before you're 30. What makes you different? Why have you been able to do this? And what's the biggest challenge you've had to overcome to make it work?
Yeah, that's a really good question. I think it comes down to your why, to be honest with you. A lot of people talk about this, but it's just, and I think we talk about it because it is really important. Mm-hmm. And my why for me, I had to really delve deep because a lot of people are like, well, because I want cash flow. Well, but why? What are you going to do with that cash flow? Let's get detailed. And my why was, well, I wanted that time. And I think that time is the ultimate wealth for me. And I wanted that time specifically. Now let's get nitty gritty. What are you going to do with that time, Olivia? And I found that my passion is that I would love to one day be able to travel around Australia to teach young people the importance of getting financial education. Not teach what it is exactly. I'm never going to know everything, right? But at least the importance of going to get that financial education and starting with kids as well, because kids are my passion. And I think if you can start earlier on, you can really hit compounding on the head. And then there's a lot of kids out there that want to know this sort of stuff. I've got a lot of friends whose kids are like, at high school sort of age and they're passionate about it. That's where my passion was. And I think that's where my why came down to, what do I want to do with my time? And what do I not want to end up doing with my time, which is working and slaving away until I'm 60 or 70 years of age.
In an industry where it's basically retail, you could have a first-time investor wanting to go get a mortgage. You could Did you niche down your business? Did you say, I am not here for everyone, I am here for some people? Or how did you do that? Or did you just say, oh, I'm just less available there and it's a survival of the fittest?
Well, it's yes, and yes, all of that.
Okay, good.
Yeah, niche to grow rich. This is another, or there's riches and niches. This is another saying that we hear all the time, but we don't implement, right?
We call them niches here, but that saying isn't the riches are in the niches doesn't quite work.
The riches in the niches. Yeah. So I did. I niched down and I said, I can't be and I feel this way. If you're selling everything to everybody, then you're selling nothing to nobody. Right. So yeah, I niched down into what aligned with my core values.
And what was that?
Aligned with my core values. So for me, it was doing veteran loans because my husband's father was a veteran and I was raised in a town that had all kinds of military establishments. So that was important. I niched down into jumbo loans, right? Doing higher end loans because I didn't want to quote a rate. I wanted to dig into the financial DNA of a client and the complexities that were involved with that, so that it would feed my need in this business after that many years. You know, that was boring. I wasn't getting out of it what I wanted. So I wanted a little more. And that was aligning with one of my core values. And then, the last one was investors, because I'm an investor and because I needed to find outlets beyond just the normal traditional financing, because even today I do origination for investors only, and it doesn't require that I'm licensed the way I used to have to be and everything, because it's just a different world. And again, there's a complexity of it and the wealth creation that goes behind it. So I went into that niche, and I realized that investors don't work on weekends, that veterans are working on weekends, so they're not going to be calling me, and high-end clients don't work on weekends either. And what was happening before that was that I was getting every Tom, Dick, and Harry and every real estate agent that, you know, said, oh, I don't have control of my business, so I'm going to flop that onto you, and can you do me, you know, do a pre-approval letter on the weekend and do all. And so I had to say no to those people and really focus in on people that complement and not complicate my core values, so that I can have this lifestyle.
So what's your advice to people coming into this cycle? And what's your personal view? Are you going big on property? Are you going to go and start buying up land everywhere for this next cycle? And what's your perspective? Or are you going deep on shares? You know, I'm very curious, and I'm very curious to know what your perspective is, and also what your advice would be to other people.
Yeah. So I mean, obviously not providing personal financial advice, look, I mean, to be honest, even if you know about the cycle, it doesn't mean you're going to necessarily be a great investor. I mean, whatever you're interested in, you should learn sort of and study and you know, spend the time investigating how it works and what you should be doing. So, you know, you've got to do that thing. And as for that, just depends on what your interest is in and what you feel you have time to learn about. Because, you know, property investing is not the most straightforward thing, even in a boom period. I mean, you can get away with making mistakes maybe, but you can still end up with some pretty rubbish investment. So if that's your thing, you should, you know, and there's so many different things. You could be a buy-to-let person, you could be a property developer, you could buy pieces of raw land and wait for the town to grow up around you. I mean, that sort of thing. But all of those things in good location, depending on how long you can hold for, all those things will make you money. Some will make you more immediate income, some will be more about capital growth, but they'll all make you money if you do it right. The share market is quite interesting because you know, you can make a lot of money quite quickly. There's a lot of different styles of investing. You know, some of it's just about capital growth and, you know, technology stocks and biotech and so on. Some of it pays great dividends, but they also appreciate. So for me personally, I'm trying to, I mean, I do a bit of investing in the share market for sure, because, you know, you don't want to be exposed just to one asset class. I've got some rental properties in the UK. I've also owned shares in a company which owns a big plot of land just outside London. So I'm trying to, you know, have exposure to different segments of the, you know, the property investment.
I think a lot of business builders, they think, right, what I'm going to do for like the next 10 years, right, is I'm going to build this business. I'm going to shovel every last cent back into it. I'm not going to worry about paying myself too much money. I'm going to, you know, sweat grind. And then in 10 years time, I'm going to sell it for $10 million. Yahoo, happy days. And then what happens when you got the $10 million? All right, I'm going to go buy my dream house. So I'm going to buy it in cash, right? This was kind of all percolating in my mind this morning.
Again, my exact fantasy. Continue on. I'm enjoying it so far.
Yeah, and then I was like, okay, right, so let's just say I built my business, and this is the thinking that I was having this morning. Let's just say I built my business, right, and I've sold it, and I sell it for like, I don't know, let's just say I sold it for $8 million. And I went, you know what I'm going to do? I'm going to buy or build my dream house, and it's this house that I can see on the corner being built. All right. So then I was walking through the situation in my mind where I bought the dream house. It's fully paid off. I don't own a cent, and I'm sitting in my house with Gabby, and I'm looking out the window and I'm thinking, man, I wish I had something to eat. Because I had no cash. I've got no cash flow, right? Because I've got this fully paid off asset and I've got no actual cash. And I think that there's this kind of idea that money equals wealth or big equals rich. And these kind of paradigms, these thinking, structures really need to be broken apart, because I just don't think that that's what people should be thinking about.
It's so interesting. It's so interesting that I think I will speak for myself and not for other business owners, but what you've basically just described was me. Like absolutely the thought patterns I'd have. It was only till I suppose I started getting some education and looking into it that I had that epiphany. It's like, it doesn't work that way.
Yeah.
Like that's actually the completely opposite effect you would be creating, like the cause and effect. And can you imagine actually doing it and working it out? Maybe you're 60 or something, and that happens, and you get to that point and you look back and go, regret.
I just want to come back to what we talked about earlier. The key word is opportunity. I think that's what people should write it and put it on the wall, print it out, make posters, put it on your wall. Opportunity, opportunity. For those who take action, the people who detach from the herd and run in the opposite direction are always the people who succeed with any endeavor anywhere in the world. Warren Buffett, that's his philosophy. You do the opposite of what everyone's doing. You buy when others are selling, you sell when others are buying. You also take a long-term view. But it's about not being a herd animal. It's detaching. Because most people would rather be part of a herd that's stampeding towards a cliff than detach from the herd and run in the opposite direction towards safety or prosperity. Be the opposite of a herd animal, see the opportunities and take action.
Understanding the types of people that are moving to different locations. For example, if you knew that just broadly there was 22,000 people moving out of Canberra and they were all over 60 and they were all moving to Bateman's Bay, you might be like, great, I'm going to go and invest in a retirement village in Bateman's Bay. I don't know, right? But you could use that as a kind of trend. How can you work that out? How can you use that to your advantage as an investor?
Well, how do you work it out? Probably there are three ways. And again, the first way, and this is largely my experience at the ABS, working there for 5 years, we have a number of products developed that give you the answers to those questions. And one of those is called Quick Stats. You can go into Quick Stats and very quickly look up the changing demographics of any area. And you can do this at even at a size of Canberra or right down to a suburb level. So it's telling you, are younger people coming in or out? Are the number of renters increasing or decreasing? So that's the first thing I look at. The second thing I then look at, going sort of cascading down a bit, is to look at, well, where is the demand going at the moment for properties? And I see rent demand rising, so obviously young people moving in. And then I see the demand for big old family homes decreasing. So that's an easy one. Our database tells us that. And then the third one is to do on-the-ground research. You go and have a look and ask real estate agents and buyers agents what's actually happening on the ground, and that will confirm or refute what your other findings have told you.
Yeah, cool. I like that. Yeah, I'm a strong believer in, data will only tell you one side of the story. You have to understand it from a human level as well. And you only get that from the coalface.
What is the number one reason that most people get stuck at one or two properties? Because 94% of investors never make it past property number two. What, in your view, is the major reasoning behind that?
There's a few, because I've looked at that problem and I've developed actually a strategy to get around that problem. So there's a few reasons. So one is a lot of people still have a do-it-yourself mentality, I think.
Yeah.
So I think personally for me, it starts with mindset. And people are stuck in this old Australian adage of, I'll have a go, she'll be right, I'll do it myself. And for various reasons. And I think that's the first mistake people make, that you can't hope to get a better result than what your peers are, what your family has, if you're not going to try something different. You're not going to change the results. So first thing they've got to realise that maybe they're not the expert in everything. They might be a generalist, which is fantastic, and they know a bit about property, they know a bit about finance. Like it doesn't take an Einstein to walk into a bank and ask for a loan. You need to have it. You've got to understand that you're going to need a team of experts to make it happen. That's the first, which is a mindset thing. The next thing is the structure, because you could actually be your own hindrance, because you go off and buy a property and you haven't actually even thought about the structure of what you're going to own it in, because the structure actually affects your borrowing capacity. The
more that you think about real estate like a business, the more it changes the way that you will approach real estate. So even as we said, the types of assets you're going to select and why you're going to select them, and the diversity of the location. And as you say, within your real estate business,
you will want to then, there's so many different ways you can diversify by asset type, diversify by outcome that you're after, whether it be growth or cash flow, multi-occupancy, so you've got better rental stability, all of these kind of things. Location, how are you offsetting costs? You might find that right now, the best properties and the best opportunities are all in Queensland, but then you might go, well, how do we offset the fact that that's now going to create more land tax because we're going to have more assets in one state, for example, whereas some states are going to have land tax from the first property you buy. And then, so you've really got to think about all these kind of things. But again, leaning back to what I said earlier, all of that stops mattering if you create enough profit in your portfolio. Like none of it actually matters. Oh, okay. So, oh my God, I got a land tax bill of $100,000. Does that even matter if your portfolio is producing $500,000 profit? Maybe not.
I think you think about it differently if you're in that position. I think if you're on a squeeze and you get a big bill, like if let's pretend you're someone out there and you've got $1,000 in your bank account and you get a bill for $2,000, like, I can see why that would cause duress, stress, make you uncomfortable. If you got $1 million in your bank account, you get $1,000, it's like, oh, no biggie. You roll on.
Okay, yeah, cool. Let's move on. And so the emphasis really needs to be on profitability.
Yeah, which is really where I guess that's what we refer to as like the buying window.
Yeah, the optimum buying window, correct.
Window. And it's really like that's the game for investors. If you're a real estate investor, that is the game, trying to identify when that point is. And you hear it all the time about the warnings of like, don't try and time the market, which is true for most people who don't have the discipline to actually do the research and actually commit to being a professional in this space in terms of the quality of the output that you want. If you actually want to make a valuable, portfolio, then you commit to learning these skills and commit to understanding and educating yourself on how to identify that time. Because like if you bought in at that regional town at an auction that's got one person there, you might be eventually one day that might be a hotspot. But if you're holding it for 10 years until it becomes a hotspot, you've got 10 years of sunk costs, of opportunity costs. You've been sitting there waiting. Whereas if you're an investor, that's a bad situation. Whereas if you can upskill yourself to identify the time just before it becomes a hotspot, that's the biggest way to leverage this information, right?
It's the key.